See, one thing I really pride myself on here on this channel is being early to identify trends or changes. Because let's face it, half of Wall Street is disconnected from reality. They take their clients' money, they throw it in the top 10 stocks in the S&P and average the S&P's returns. And that's okay for some people. But if you're watching this video, I imagine you are someone that wants to beat the S&P 500, that wants to be prepared to seize an opportunity when that is in front of you. And I mean, if that's not you, then click off this video. This video, nor this channel, nor financial YouTube is for you. You're wasting your time. Put your money in the S&P and call it a day. And what I'm going to say next is going to catch a lot of you guys off guards. A lot of you guys are not prepared for this, and that's exactly why I feel like this is such a dire video that you try to understand as best as possible. And unfortunately, let's start here. You are about to see a correction, at least within the next 6 weeks. Now, the last time I had a 10% correction call was on July 9th. And what actually ended up happening over the next 5 trading days, markets actually went higher. The S&P 500 went about 1.6% higher over those 5 trading days. So a lot of the time, I'm early to identify things, and I've accepted that. And hopefully you'll appreciate that if you're watching this video. Now, if you came here expecting me to say the markets are going to go through a correction because of the election, that's not an issue. Now, specifically with the election, if there is a prolonged period after November 5th where we don't know who won the Senate, which side that is, we don't know who won the presidency, that could become an issue for markets, but I'm not even factoring that in to this video. So keep that in mind. That's a bit of a wild card at this point. And I think we should really separate the markets. You have AI, your top 7 stocks, call it AI, which I know there's more to those businesses, but call it AI. Nvidia, Apple, Microsoft, Google, Amazon, AI. Then you have the rest of the markets. And today is a great example of what I'm going to say next. We have a problem in the area of the rest of the markets. We also have a problem with AI, but we'll get to that in just a moment. And I actually believe I'm the first one to say this publicly. But let's start with the issue with the broader markets. 10-year treasury yields are becoming unhinged. This is something I talked about in the video earlier today. That's kind of known at this point. Now, how high do 10-year treasury yields go? That's up in the air, and I don't have the answer for that. But at this pace, it doesn't look like it's slowing down, at least not yet. Now, there are many issues that stocks face when 10-year treasury yields go higher. The risk to reward investing in markets at all-time highs after even a very broad-based rally we've seen, the RSP still sitting near all-time highs. When you can now yet again get paid 4.2% in a 10-year treasury bond, take zero risk, and make 42% over 10 years, that's not terrible. But the biggest thing, from my perspective at least, that's a negative about this rise in 10-year treasury yields, at least in the near term, it kind of kills the odds of a broader based rally for stocks. So at least until 10-year treasury yields start to stabilize and hopefully fall back down to the lower 4s, it's going to be hard to start a broader based rally no matter what happens with company earnings. No matter what happens with the election, no matter what happens in the Middle East, that is a very large headwind at this point for the rest of the markets. Is it impossible for the rest of the markets to rally if 10-year treasury yields continue to go higher? I mean, it's happened before, but statistically, it's very unlikely. So we don't really expect, at least I don't really expect, much participation in the sense of a broader market rally. Not as rates are now at 4.2% and look poised to go higher. Some say 4.5%, some say 5%. Pick your number, but any higher than 4.2%, we have a problem. And we even seen today, we had a problem. The RSP, the equal weight S&P, was down 1% today. Now, the bigger problem that markets have right now is actually not the rest of the markets. I can make a pretty fair bull case for the rest of the markets as long as 10-year treasury yields fall a bit from here. If we get some Fed rate cuts, let's be honest, I'm expecting the economic data that we get, retail sales, non-farm payrolls, right, PMIs, all of your economic data is probably going to start coming in a little bit weaker after a little bit weaker after a little bit weaker following the election. Call me jaded, call me crazy, but we've seen the biggest seasonal adjustments ever, the largest revisions ever, just within the past 3 months. And it's basically political suicide to have the economy weaken before an election. In fact, only one president has ever won an election or a re-election, or re-election that is, because you got to be in office to get re-elected. If there was a recession 2 years before the re-election, and that was William Taft in 1917, I want to say 1917, that if my memory serves me well, that's the year. It doesn't happen all the time. So the economy is the biggest thing that moves the polls. Now let's stay unpolitical for the sake of this video. We all have our varying different opinions, but none of that matters. At least not for this correction call. Back to my point, by the time we get to December, January, February, March of 2025, it's going to be clear the economy is, if not in a recession by then, the economy is not red hot where the Fed's going to be able to keep rates roughly, 50 basis points lower, 75 basis points lower than they are now over the next 10 years. Inflation is going to come down, I still believe, over the next couple of months, and 10-year treasury yields will fall, and you will eventually see a broader market rally. So, we only have a problem here, I think, for the next 6, call it 8 weeks. Now, clearly, could you get a growth scare in there? Yeah, and I think that's probably part of the correction call as well. Now, are you ready for the holy grail, the home run, the grand slam of this analysis? The thing that kind of leads me to this conclusion that we are about to have a correction. It's actually Apple and Nvidia. But you can group the rest of big tech in here as well. And let me explain. Apple was up 0.63% today. Nvidia was up over 4%, up another third of 1% in after hours, hitting a new all-time high. Just these companies alone account for almost $7 trillion, which is over, 20%? Of the US GDP. The problem is not these companies are going to go to shit or be terrible. The real issue is expectations, specifically with Apple. And if you've thought about this already, I pat you on the back because Wall Street has not even considered this as a possibility yet. And I think it's more of a base case. Apple Intelligence. Yes, Apple Intelligence launches next week. We have a bit of an issue. Not because Verizon's telling us we're just not seeing many people upgrade their phones. They're not buying the new iPhone. Shipments are not looking good out of Apple suppliers. But the problem is, which that may be a problem, we'll see when it comes to Apple earnings. The real problem is Wall Street believes Apple Intelligence is going to drive this massive, and I heard multiple times today, quote, massive refresh cycle for people to go buy themselves a new iPhone. Let me tell you right now, I got the iPhone 12 and I could go buy a new iPhone. But do I need to? I mean, this is literally the iPhone 12 over here. No. And I'm more well off than the average person. The average person or family is not really in a position to go spend a whole lot of money and buy a new phone. Or upgrade their phone for $0 a month, couple $100 initially, and raise their phone bills. That's just not really in people's budgets right now. Now, call me crazy, but But I think Apple at $236.48 per share, which really has not grown in 2 years for the most part. They've at least not grown top line revenue. Their earnings growth has been pretty average compared to the markets. I don't think Apple Intelligence solely justifies this rally in Apple, especially when we start to get shipment numbers and data coming out. It's probably not going to look that great. The assumption is on Wall Street that Apple's all of a sudden going to see a massive refresh cycle. And that's just not going to happen for Apple Intelligence. Besides ChatGPT, the most people use AI for today as more of a leisure, non-work kind of thing is like filters on Snapchat or interactive things on TikTok. Is that really going to drive people to go get a new iPhone? Oh wait, it gets better. The iPhone 15 Pro and iPhone 15 Pro Max will also have Apple Intelligence. So you're people that just upgrade to the next iPhone. What I've heard from them is they're not getting the 16 because it's pretty much the 15, just packaged a different way. Now, what's going to happen after the disappointment from the expected Apple Intelligence release next week and the lack of a just crazy refresh cycle that markets are expecting, that's not going to happen. Don't buy that for a second. It's not going to happen. And even if it does happen, it's priced into Apple. So Joe Schmo, right? I think there's a lot more of a downside risk here. I think there's probably an 85% chance you don't see a massive refresh cycle, maybe a 90% chance, 10-15% chance that there is a decent refresh cycle because of this. Nonetheless, when you get disappointed here, well, what do you think that means for Nvidia as the largest show of public AI adoption fails? Yes, we've had ChatGPT. And then that's been great for, cheating on school projects, finding answers quickly. ChatGPT is a blast to use. Have you seen ChatGPT numbers lately? Like, they're down a lot. At the peak, there was 75 million people using ChatGPT per month. Or at the peak, there was more than that, but like a moderate, trend about a year ago. Today, there's like 4 million people using ChatGPT a month. Yes, it was great for, what you needed to do, and I don't want to bag on AI. I'm the most bullish person you've ever met on AI long term. The world could look like the Jetsons in 30 years from now. But the expectations are the problem. See, when this public show of AI flops, at least initially, Wall Street is going to panic. Because you know who else is trying to get massive AI adoption? Every other trillion-dollar company on our markets. And they're spending hundreds of billions of dollars to do that. The problem then becomes, if Wall Street is not convinced that average people that are not on Wall Street, are going to start using AI, if that's a question mark, what do you think Wall Street is going to do? They're going to start punishing Nvidia because you're pricing in a lot of growth. But they're also going to start punishing big tech companies that are spending a fortune on AI, much the same way as Meta's metaverse was deemed not to be something that will catch on in the public's view. Wall Street was like, hell no, you need to stop spending money on the metaverse or we're going to send your stock to zero. That's how it felt in 2022. You could very soon start to see a similar phenomena. And I think that's the real problem that we have. And I feel the strong urge to make this video, even though I'm early. I mean, how soon are we going to know that Apple Intelligence is not as popular as we think? I don't know, 3 weeks, a month, maybe sooner. Maybe Apple tells us to, maybe they lower our expectations. I'm not 100% sure. But I think the sooner you know this, the sooner you can prepare for this. Now, some of you guys might say, well, none of that's a huge problem. Well, if you consider Nvidia has accounted for almost 30% of the gain in the S&P 500 so far this year, And if you consider your top 10 largest companies in the S&P 500 account for 70+% of Nvidia's revenue, that would be a big problem if CapEx budgets start to get cut. Not even by like a lot, just a little bit would be a problem with expectations where they are. So you could think about this in a dramatic sense. Maybe Apple Intelligence is a total flop. Maybe CapEx budgets get cut in half for AI. I don't think that's going to happen. In that kind of scenario, with the market weighting you have with big tech in the S&P 500, you would see more like a 25 to 35% decline. I don't think CapEx budgets are going to get cut that much. I think it's going to be more of just really disappointed results out of Apple and, CapEx budgets that start to get cut. I don't think the process is going to happen overnight. That's for sure. But I could easily see this causing a 10% correction in and of itself. I mean, just consider today, if Apple and Nvidia just performed with the markets, our RSP down 0.8%. If Apple and Nvidia were down 0.8% apiece, markets would have been down over 1% for the S&P. In fact, the S&P was only down 0.16%. So it doesn't take a whole lot of downside necessarily for big tech to, have a huge impact on the markets. Now, I think a bigger question, again, will be what's happening in the economy with economic growth. Is there a broadening trade happening at the same time? If Wall Street just sells big tech, buys the rest of the markets, this is only going to be like a 10% correction. If you have maybe a contested election, throw that in there. If you have an economy that is weakening, more recession fears, then you're looking at something that could be larger. But I don't want to go out on a limb and say that because the animal spirits are high in this market. Valuations really don't matter to a lot of investors. I mean, the money just keeps flowing regardless. So yeah, this could be a big downside event or just a 10% correction. I think a 10% correction is the safer prediction to make, so I'm going to go ahead and stick with that. But I also don't think a larger crash-like event is out of the picture either. It really just depends how this thing goes. I mean, you could make a pretty conservative bet that Apple Intelligence moderately at least disappoints. Maybe it's not a total flop. Maybe it's okay, but not great. And also come to a conclusion of maybe Apple falls 20% from here. Maybe Nvidia comes down a bit. Maybe you get a 10% correction just from a mild to moderate disappointment of Apple Intelligence, given where expectations are at. If Apple was a $190 stock, $200 stock, this would not be in the conversation. The expectations being so high set up for what is almost certainty of disappointment. That's where the problem is. So let me know what you think about all of this information down below in the comment section. I know I dumped a lot on you. I would love your thoughts, love your opinions down below. That's it. Stay safe out there. Enjoy the rest of your day, and I will see you in the next one.